Hello, everyone. Troy Evans with Cinch Home Loans. Today, I want to talk about a recent article by CoreLogic detailing current delinquency rates in the housing market. I want to talk about foreclosures, whether or not this is causing a housing market crash, and of course, what happened to all of those mortgage forbearances. So you may remember at the beginning of the COVID-19 pandemic that mortgage borrowers that had a Fannie Mae, Freddie Mac, FHA, VA, or USDA loan were eligible for a mortgage forbearance. That forbearance plan allowed those borrowers to temporarily pause and in some cases even reduce their monthly mortgage payments until they got back on their feet. That initial plan from 2020 was set to last 3 to 6 months, but it has been extended a couple of times. And in fact, so you can see here that if your loan is backed by Fannie Mae or Freddie Mac, there is not currently a deadline for requesting a COVID hardship forbearance. But what about all those who entered forbearance early on? I want to point to an article that was put forth in May of 2022, so May of this year, by the Federal Reserve that outlines the plan showing that 16% of mortgage loans entered forbearance between April 2020 and December 2021. So many in the housing market have been preaching that those 16% would lead to an increase in foreclosure rates. Therefore, it would tank the market, lead us right back to the housing crisis of the late 2000s. But the report from the Federal Reserve goes on to say that 85% of those loans were in forbearance for a year or less, and over 50% had loans in forbearance for 3 months or less. So again, 16% took advantage of forbearance, but over 50% of those 16% exited that plan inside 3 months. So with so many of the forbearance loans now exited of the plan and back to regular payment schedules, what has it done to the delinquency rates? And has that affected anything market-wide? The Federal Reserve also has a report that shows that data. In second quarter 2022, the delinquency rate was roughly 1.96%. And you can see on this chart dating back to 1991 that delinquencies rose during and then spiked as a result of the 2008 housing and financial crisis as it was taking shape. A 10-year view shows us that delinquencies have been steadily declining since then, with a slight blip in 2020 following the onset of the COVID pandemic. If we switch to a 1-year view, this shows the decline through 2021 and 2022 in delinquency rates. So I talked earlier about this CoreLogic report. Let's pull this up. So this recent report by CoreLogic shows a year-over-year decrease of 1.2% across the country in delinquency rates. It even highlights many additional details about those. It also shows that there were no metropolitan areas where serious delinquencies increased from 2021 to 2022. So as a surprise to many, to date, the forbearance plan has not caused an increase in delinquencies or a flooding of foreclosures that could tank the housing market. This is something that I'll continue to keep an eye on and update y'all when more data is available. If you liked this video, share it with your friends.